Washington, D.C. just had its coldest winter in more than 2 decades, but the thaw of spring has finally arrived, just in time for the cherry blossoms to reach full bloom. And like the buds on the trees, a flurry of activity has burst forth from the White House and Congress in recent weeks. All of this comes amidst an escalating war in the Middle East that threatens to push up inflation and mortgage rates just as the spring home buying season kicks off. Like always, MBA is closely engaged on all fronts, ensuring that our industry's voices and priorities are not only heard, but actively considered and reflected in policymaking. I want to give you a quick update on 3 policy items from the last couple weeks. First, the Basel III reproposal. Last Thursday, the federal banking agencies, the Federal Reserve, OCC, and FDIC, released the long-anticipated Basel III endgame proposal on bank capital requirements. Our initial review is that it reflects significant progress for a revised capital framework that works much better for our single-family and commercial real estate finance members. The reproposal reflects several priorities we have long advocated for: reducing the punitive capital treatment of mortgage servicing rights by eliminating the cap on mortgage servicing assets, adopting more granular, LTV-based risk weights for loans held on banks' portfolios, and taking steps to reduce the punitive capital treatment of commercial real estate loans on banks' balance sheets. These wins are the result of more than 2 years of sustained MBA advocacy through comment letters, meetings with regulators, and testimony I gave before Congress back in 2023. The initial proposal in July 2023 was flawed and unworkable. We pushed for a reproposal and got one. Comments are due June 18th. We'll work with you to recommend a few more changes, including reestablishing a 50% risk weight for warehouse lines for all banks, a fix that would strengthen the flow of mortgage credit from banks to IMBs to borrowers. Recognizing the value of private mortgage insurance in the assignment of risk weights for loans held on balance sheets. If PMI is properly accounted for, loans with insurance coverage are treated as less risky, which lowers the capital banks must hold against them. The bottom line is that MBA has long emphasized that banks play a critical role in mortgage lending and servicing, both directly and through financing IMBs, as well as in the commercial real estate market. For more information and to participate in the working group that will meet to comment on this proposal, please contact MBA's Fran Morty and John Lammel. See their contact information below. Additionally, we will be hosting a webinar on the reproposal on Friday, March 27th. See the registration details below or go to mba.org/webinars. Next, I want to talk about the 21st Century Road to Housing Act. The Senate earlier this month passed the 21st Century Road to Housing Act. This massive bipartisan measure includes many positive provisions to boost housing supply, streamline federal housing programs, expand access to small dollar mortgage lending, and advance manufactured and modular housing, among other things. But while there's real progress here, there is still work that needs to be done now that it's the House's turn to take up the bill. Our 4 biggest concerns are restrictions on institutional investment in housing that would limit financing for build-to-rent and build-for-rent housing communities, drafting errors in the FHA multifamily loan limit section that would unintentionally reduce multifamily loan limits and limit capital for new rental housing development. Third, a new requirement that servicers provide foreclosure mitigation counseling paid for from FHA insurance reserves for all government-backed loans at 30 days delinquent, something that would unnecessarily drain the FHA's Mutual Mortgage Insurance Fund without meaningfully improving borrower outcomes. And fourth, adding VA loans to FHA's informed consumer choice disclosure, which would create costly compliance burdens for you while doing little to help the veterans. That's why MBA is urging lawmakers in the House to fix these elements before the bill moves forward. We released a Mortgage Action Alliance call to action, asking members to contact their U.S. representatives to specifically address the problematic build-to-rent and FHA multifamily loan limit provisions. If you haven't yet, act today by clicking the Take Action link at mba.org/MAA. We will continue to keep you posted as negotiations between the Senate, House, and White House ramp up in the next few weeks. Finally, 2 White House housing executive orders. President Trump recently signed the 2 EOs aimed at reducing regulatory barriers to housing construction and expanding access to mortgage credit. MBA strongly supports the efforts to reform appraisals, ease construction regulations, and encourage home building. We also appreciate the administration's focus on addressing costly mortgage regulations that have increased costs and limited access to credit. Unfortunately, many of the core reforms considered in the mortgage credit order are narrowly targeted to smaller banks, excluding independent mortgage banks and other key market participants. Given that IMBs, credit unions, and large banks account for more than 80% of the single-family mortgage market, the EO's current approach would reach only a limited share of lenders and borrowers. I would also note that these changes won't happen overnight. The proposed reforms will require formal rulemaking, meaning agencies such as the very understaffed CFPB will need to draft, propose, and finalize updates to some key regulations. There will be a lot more to come on this in the coming weeks and months. In conclusion, I only touched the surface of what has been an extremely busy start to the year, but I want to make a final plea. Get involved in our advocacy. At a recent MBA conference, FHA Commissioner Frank Cassidy volunteered that without the active engagement of MBA members in organizing and bringing ideas together, nothing would get done. To me, that was a resounding invitation to stay engaged with us in the policy and advocacy process. A good place to start is at our National Advocacy Conference on April 14th and 15th in Washington, D.C., capped off with what will be a tremendous reception on the 15th at the newly renovated National Air and Space Museum. While the cherry blossoms will have fallen off the trees by then, our efforts to support you will never wilt. Don't hesitate to contact me or anyone at MBA anytime with your questions or comments. Email me at bob@mba.org.